Welcome back to the FDIC Money Smart course, Money Matters. I'm John Hurley, the Financial Literacy Consultant for the Apache Junction Public Library. On this segment, we're going to cover the second step in creating a spending plan, and that's to determine your income and expenses. Now, income is money that you get from various sources, such as wages, self-employment income, could be child support or alimony, could be interest or dividends, or Social Security, or tips, or even public assistance, which might include things like the temporary assistance for needy families or food stamps, those sorts of things. Now there's two categories of income. There's gross income and net income. Your gross income is your total income without deductions. Now your net income is gross income minus your deductions. Now what are deductions? Deductions are certain items that are removed from your gross income to either pay for services like medical insurance, or to pay for your taxes, or to be held for you at a later use, such as Social Security, pensions, things like that. Now let's talk for a moment about one of the biggest deductions in your paycheck, Social Security. Now this is a typical deduction out of your paycheck because it's a very important insurance plan for you. Now on some pay stubs it's called FICA or FICA, which stands for the Federal Insurance Contribution Act. Now, Social Security includes the following for those who are eligible: retirement benefits that are paid every month to retired workers as early as age 62, disability benefits that are paid every month to workers of all ages who have severe disabilities, also family benefits that are paid every month to spouses and children of retired and disabled workers, and survivor benefits that are paid every month to widows and widowers and children of deceased workers. It also includes Medicare benefits that are paid as needed to help with hospital bills and some insurance coverage for stays in nursing homes, hospice care, and other medical services for people 65 or older to younger people who are also disabled. Now, if you're 25 years or older and you aren't already receiving Social Security benefits, you should receive a Social Security statement just before your birthday every year. Now, this statement as a record of your earnings and the Social Security taxes that you've paid during your working years. And it provides you with an estimate of your potential monthly Social Security, retirement, disability, and survivor benefits that you and your family could be eligible to receive. And if you see any mistakes on it, report them to the Social Security Administration using the telephone number that's on the statement. Now let's talk about expenses. There's two kinds of expenses. There's fixed and flexible. Fixed expenses don't change from month to month. Typically, you don't have total control over how much you pay for these. Some of the fixed expenses are, for example, rent and fixed loan payments. Flexible expenses often change from month to month. You usually have some degree of control over how much you pay for these expenses. For example, if you decide to lower your thermostat during the winter to save on heating costs, you probably are paying less than you did on that the month before. Now I'm going to read you a list of some other monthly expenses that you have control over. And as I read this list, think about your needs versus your wants. And can you think of ways to lower the cost of these expenses? Well, you could conserve energy by using ceiling fans or turn off lights or other appliances when you're not using them. You could reduce or increase the temperature on your thermostat so it runs less when you're away. And you could use weather stripping. And you could conserve water by installing low-flow shower heads. You could reduce your long-distance phone calls and eliminate extra phone services like caller ID, or maybe eliminate some cell phones or landlines that you don't really use. And for food, you could shop for items on sale. Now for transportation, you could carpool, or you could get a monthly transit pass instead of always buying an expensive daily one. And when driving, you should keep your tires properly inflated, which will actually save you on gas. And for car maintenance, you could make sure that you perform regular maintenance on your car, thereby avoiding bigger and bigger expenses later on. And for education, you could ask your employer if they have tuition assistance programs. For personal items, you could save for clothes at less expensive stores, or go out to eat less often, or rent movies instead of going to a theater. And for charities and donations, you can still give, but give in-kind gifts to charity like clothing or kitchenware instead of always giving cash. That concludes this segment of the FDIC Money Smart course, Money Matters. I'm John Hurley, the Financial Literacy Consultant for the Apache Junction Public Library. Thank you for watching.